David Whitcomb. I'm Vice President of Product over Connectivity at MX. That effectively means I lead our aggregation groups, one of our acquisitions that we did a couple of years ago, as well as the way that our users connect to their accounts to their financial partners. So I'm leading that whole part of our organization.
Wonderful. And how long have you been at MX?
Been at MX for a little over a year and a half now. Prior to that, worked for Fiserv, so they'll be presenting a little bit later. And before that, I actually worked for an FI for almost 10 years. Did a good variety of things in that FI while I was there. So it's been fun.
Awesome. And Wade, can you introduce yourself?
Absolutely. I'm Wade Arnold. I'm the founder and CEO of Move, and super excited to be here. This is an industry I've been in and playing with for the last 18 years of my life. So this conference even exists is exciting to me.
Awesome. Thank you for saying that. And maybe while we're with you, can you tell us a little bit about what Move does?
Yeah, Move, it makes it easy for developers to accept, store, and send money. So API first company in order for people to do that can do it either with their sponsor bank or bank agnostically. So making the simplification of money movement easier for people to put that inside of their applications.
And how long has Move been around?
Well, Move actually started as a passion project of mine 3 years ago as an open source building blocks of financial services. So everything from ACH wire, image cache letter to credit reporting. And a year ago, I decided to make a run of it and see if we can make a company outside of this passion project.
Amazing. Well, thank you for joining us. So David, we're going to kick it back to you. This session's about open finance. And I know one of the things, Tearsheet, our reporters in our podcasts and our newsletters, one of the things I don't know if we struggle with it, but it's open finance is one of those terms that everybody kind of defines differently. So how do you and MX talk about open finance? How do you think about it?
Well, I think we really start with a bit of context around it, because you can't just say open finance without looking a bit at history. So when we start by looking at history, we look at open banking to start with. And I would actually say before open banking, we should actually talk about closed banking.
Okay.
Which is how users would connect to their banking data today in a lot of ways. And that's that when we think about screen scraping, to me, screen scraping is closed banking. It's customers having to jump through different hoops to access their data where they want to access it and share it with their partners. I think if you look historically, Intuit's kind of the great grandfather of it, right? With Quicken and QuickBooks and the services that were making the financial lives of some small businesses and users better. And even like looking back, my life of PFM started with Microsoft Money. And so I remember putting in credentials into Microsoft Money back in probably the mid to late 90s and early 2000s. Loved the program. But when you look back kind of industry wise, that's when some of the first standards started. And so I think when I think about closed banking, like banks didn't necessarily want to let that data leave their ecosystems. And so if we kind of start with that as a starting point, we can start talking about open banking, which is really the goal of sharing, users being able to share their data securely. And I think one of the biggest things you touched on earlier is the sharing via API. And so while we're seeing progress with APIs with banking data, we still have a long ways to go for really, especially North America with US institutions who are just behind technologically. So we start with that as a baseline, right? Open banking, and then you look at the UK and Australia. Open banking is legislated banking data. In the UK, it's specifically transactional account banking data, not even the broader banking things like loans and mortgages and student loans and things of that nature. So when I think open banking, I think it's banking data. And in the US, I think it's more than just my transactional accounts. It's my accounts, it's my deposit accounts, my loans, my bigger financial picture. So when you step out to a broader world of open finance, I think that's when you start to look at the bigger picture. Like again, Tearsheet's doing a great job at bringing in folks like Argyle. We're seeing so much excitement around payroll data right now. And that's a new world and a new way of thinking about consumer data and consumer financial data specifically. So stepping back to open finance for me means it's not just about banking data now. It's how do we start looking at investments? How do we start looking at insurance? How do we start looking at payroll? And not just on the sharing of the data. But why do we have Wade Arnold here? It's because we're looking at how do we start embedding the tools that expose that data and empower consumer experiences for the next generation of technology. So I'll take a pause there. I just said a lot. That's how we think about it.
That was great. And so I guess kind of want to ping pong that over to Wade. I mean, Move is a company predicated on API connectivity. So what is your strategy around open finance in the way that David just kind of defined it?
Yeah, absolutely. So I think what's crazy about Move is the entire infrastructure, the entire what traditionally people would call core banking is actually open source. So not only are our APIs available, but we allow for the actual low level things from our ledger all the way up to our card processing system to be out there in the wild. Now, most people don't want to actually have all of that PII data on their servers or go through SOC 2s or PCI compliance or sign minimums with different payment networks. And so we host that for them. We also make it a lot easier with, open source SDKs, tutorials, actually example applications that they can use in order to build on top of that infrastructure. But we really kind of focus on if the traditional commercial banking customer is that one-to-one relationship, we're really focused on allowing that commercial customer to be able to supply payments, financing, reoccurring billing on top of their existing accounts for their end users.
Awesome. I just want to follow up with a personal question, because when you said that Move was a passion project, so was Tearsheet. And I wake up every day so happy to do what I love doing, which is enabling you guys to tell stories about what's happening in fintech and the future of financial services. So what's it like turning a passion project into a business?
I think you would understand it's very personal, right? So for me, it's been really wild to see a community of thousands of people contributing back to this project. I've been in the industry for a while as the founder of Banno, and then one of the original people at BillGo, and all of those tooling that we had to do for beautiful consumer experiences were, in my opinion, just kind of locked away in RPG code and COBOL code across a IBM iAdapter, right? And I think the passion project was really, this is so hard to connect to these old systems that fintech really makes a new opportunity where you don't need that omni-channel experience. You don't need the call center, the walk-in branch, and the mobile app and everything to have exactly the same data at the same time. You actually can just have everything in the mobile experience or the digital experience. And so that was a big, takeaway was, can we rebuild some of these technologies like ACH and Wire that have been locked away on the mainframe and build them for really a cloud native world where you need, just different use cases. Fintech is different. We've got users that do 7 million ACH transactions a day. That's a little bit different than your traditional community bank. So kind of the access patterns are much more unique, and that makes it really fun for me each day to work on it.
Great, thank you, and thanks for indulging that question. Appreciate that. So back to you, David. Move is just one example of an MX client, but I guess I want to go back to open finance and talk about how MX has that conversation with some of the constituents in your ecosystem. Like, why is it important to have a strategy around open finance?
So the strategy, why it's important to have a strategy, is that if you don't understand how you're connecting the security of the users and really the industry and where the industry is moving, you could set yourself up with some significant risks that you don't really understand. And so when MX looks at the ecosystem and the strategies that are going on right now, one of the significant things that really starts the conversation is the impending legislation. So October 2020, the CFPB announced their ANPR for the Section 1033 of Dodd-Frank, right? So all kinds of acronyms, but essentially they were saying, we are going to make a rule that says financial institutions must let users share their data. We already said they have to, but now we're actually going to make a rule and create some enforcement around it. So we often start the conversation in that world because there's a sense where defense has been really strong. The approach to the market has, on the FI side, has been, how do we keep our borders high? How do we keep our walls high? How do we keep people out? And how do we protect our business? And what we've seen is consumers, again, for the past 3 decades, have wanted to share their data because FIs can't do everything the best in the world. And so if FIs can't do everything the best in the world, there are always going to be providers who are fitting that niche differently. And so what we see is this balance between fintechs really having that laser focus on specific use cases and creating best-in-class experiences for specific needs. And FIs trying to find what their laser focus needs to be to bring that in. And so when we talk about strategy, we talk about regulation, we talk about customer experience, we talk about interoperable APIs. So I can't not mention the Financial Data Exchange. And if you can hear Don Cardinal speak later today and be a part of the panels with FTX later in the conference, like that's a vital part to understanding strategy and where open finance is moving. But lastly, we say that to have a strategy means that you're positioning yourself for growth in the future. And it's a place where both fintech and FI can start to partner more effectively. And if you don't understand the rules that are coming, if you don't understand what your focus is, you're at risk of missing some significant steps. And so we see the biggest banks in the country have deployed APIs fastest. Well, there's a reason they've made those investments, right? They're not dumb. In many ways, they're thinking light years ahead of fintechs and non-FIs. And so if you look at them as a model, they see something very important in securing and gaining visibility into who's accessing their data, how it's being shared, what the use cases are. Because ultimately, as a product owner, I say if I know where my users are going for help, I start to understand what my product is missing. I start getting insights into who I need to partner with, or what I need to acquire, or what tools I need to build to start meeting the specific use cases that are being met outside of my walls. And so if I can do that, now I can start creating an effective strategy with very clear numbers about how many users are doing it, what the potential benefit is, what the potential revenues could be that are directed to that. So I think strategy is key to open finance. And if you only play defense, you can't play offense. And so there's this balance of really understanding the market, the industry, and then saying, okay, where's our opportunity and how can we leverage that? So that's why I think strategy is really important for open finance, because it provides incredible opportunities, again, for FIs and fintechs to partner in different ways.
Right. So that's awesome. I get that, the walls are coming down. It enables banks to specialize and start being more strategic about what they do take on and what they don't. So what's the role of data in that, once you have an open finance strategy, what's the role of data then?
I mean, it's central, right? So at MX, we fully believe that data drives the experience. So if you have bad data, your experiences will not align with what consumer expectations are. So at MX, we've worked really, really hard at creating the data that comes into our ecosystem to make sure it's cleansed and categorized and enhanced. And so we're adding significant value to the data to make it more easily usable. So whether it's machine learning or artificial intelligence, getting next best offers, like the better your quality of your data is, the more you can see those things and see those opportunities come to your company. And again, stepping back to that, like the previous line, if you build your APIs and if you build your FDX API correctly, if you're building your authentication channels correctly, the data that you're now being exposed to is different, right? So from an FI perspective, the data of how many users and where they're sharing their data is a new data set that if you're living in a screen scraping world, you're blind to. You might see Intuit scraping, you might see MX scraping, you might see our competitors scraping, but you have no idea what's happening once that data leaves the ecosystem. Within open finance, and you know who, and you know how, and you know what, and that level of data becomes truly insightful when balanced with how the users are interacting. I'd say the other piece of this is we talk about data in versus data out. Mm-hmm. So most of the open finance APIs that are built today are on the FI side about data out. How do we control data out? How do we, again, build those walls? Mm-hmm. and build the right openings in the walls so data can get out safely. But we're seeing a shift of approach to data in. And so again, MX has made a lot of money on data in, where we help people bring their data into an ecosystem to improve their financial lives. But data in becomes very different as we talk about payroll, as we talk about insurance and investments. As you broaden the data in, suddenly your picture grows. And when you think about payroll, thinking about the waterfall of data, so not starting from when the money hits the accounts, but starting from when the money leaves your work to come into your accounts, just creates a completely different approach to customer data and a customer life cycle. So tons of opportunity, but the data is central. If it's good data, you can do so much more with it.
Awesome. I love your excitement, David. This is over to you, Wade. And it's hard to get, like I talk to our reporters about getting excited about data aggregation, and like they just, I think you get it, the rest of the industry gets it, like how important, financial data is as the underpinning of everything we're talking about in fintech and in modern financial services. But this is for you, Wade. You're multiple time entrepreneur, you're building products in the space and companies in the space. Where do you see companies get it wrong, either on the entrepreneurial side or at the FI side, like around open finance?
So I think it's that walled garden approach, right? So how can I step into this super slowly? So when we saw open banking, being created, people were worried about sharing their balance, even though they were willing to share the transaction history. And like, well, you could sum the transactions and get the balance, but it's kind of this walking into stage, or just the realization that the mortgage system and the car loan system and the credit card system are actually all independent platforms that are aggregated together inside of online banking. And then when we go to add an API on top of it, we realize, wait, that was just retail or commercial banking that we exposed. And we still need that screen scraper to get the entire view of the user's experience. And so I think not being fully committed to the experience, then it kind of feels disingenuous, right? You aren't authentic when you say, well, we support this API, we're providing this data, but actually, I get more data or a better user experience via the digital banking channel. So I think those lack of being like all in on it is really important. And then thinking that that's the end, right? So Move exists as a company to make it easy for people to move money from one institution to the next. So, if you're on the OG QuickBooks and you see that you're low on money over in your other financial institution, if you can't move money there, but you have to, leave this digital channel and go over there, and in order for that to happen, and a couple of days later, maybe the aggregators catch up, that's just not a great user experience. So I think, Move's a leader or an early adopter, I guess, of wanting to embed those type of capabilities and type of inside of tools like PFM. Then that should be, as a lagger, you should be saying, well, how do I add transactions inside of this? How do I allow via my API for bills to be paid? How do I allow via my API for new products to be opened up? And so I hope we don't get to this point where we finally agree that we're going to allow people to have read-only data access and think we've made it to the finish line. And if that's the case, then we'll bring back the screen scrapers so that we can have actionable decision-making inside of the products.
I get that. And I appreciate that. David, MX has lots of relationships on both sides of the network. We've talked about what open finance is and the importance of strategy. I'm wondering how you talk to your constituents about how a firm can improve its strategy. If you can give examples to that of how you've been able, or firms themselves have been able to improve that strategy.
So, gosh, when it's very different, I would say, when you talk to the fintech versus the FI, right? There are very different approaches to strategy and understanding. So, if I start with the FI side, a lot of my conversations, it starts on like, tell me about your ecosystem. Like, tell me about your stack, right? One of my jobs at that credit union gosh, 7 years ago now, was actually as an online banking mobile app developer. So what Wade just talked about is the aggregation that happens in that middleware behind online banking. Like I was writing those applications, I was seeing the data flow, I was watching the scrapers hit the services. And so my first question is often like, tell me what your strategy is around your consumer identity. Like, let's start there. Because if you don't understand your consumer identity space, you're like in a trap already, right? If you don't start owning and understanding how a consumer is identified within your ecosystem, can you identify a consumer with their email address? I would dare say that the vast majority of banks in the U.S. cannot link an email address to a user with an email address as like a primary key, right? We have a CIF that the customer doesn't know, that only the bank knows, but translating that from an email address to that number is like, tell me how you're going to make that happen in the next year, right? That's strategically, that's a vital portion, a vital part. How do I connect a phone number to a user? Like when we look at broader ecosystems right now and like outside of financial industry, email address and phone number are vital. So if a bank can't give a quick answer there, it's like, okay, like, well, let's talk about the strategy because consumer identity is vital. So that's, to me, that's a linchpin in the whole ecosystem. I just saw you come off mute, so.
Yeah, no, I was just keeping it quiet while you were talking.
Okay, cool. So to me, I often start there and then say, okay, after identity, what does the rest of your ecosystem look like? Let's do an assessment. Let's do let's list out what you've got, what your strengths are, what your weaknesses are, and where places to improve may be. And that's when we might help give an industry perspective, right? Where are we seeing people really do well? What other companies are doing really well in this space? Where can MX help? So we have, we call it our open banking portal that is similar to Wade's open source movement. It's our open source movement for how do we get the FDX APIs to be normative, right? How do we lower the entry costs so that FIs, small and large, can deploy truly customer or secure customer permission APIs to the masses and keep control of identity in the process and see where the data is flowing and connect that data more effectively and more broadly. So we're contributing in that way on the FI side. On the fintech side, our conversation is how do you data consistency, connection consistency, and data quality are of utmost importance for user experience. So if the user is really the center of all of our conversations, and it is, how do you create the best user experiences? And we often say that is with our most modern connections, right? It's with, as we're deploying some of the biggest banks, we've seen incredible results in increased speed, increased durability of connections, increased data quality. So as we see increases across the board in user experience, that becomes a strategic imperative. And so that is one conversation that actually exists in both places, because if I'm an FI and my user's data is disconnected, and a user is using an outside service and they're bound, like they really want to use that and they have a great experience there. If their experience is bad because my data connection is bad, that's problematic. Mm-hmm. So there is an incentive that the consumer mentality is changing. In Wade's world, in the embedded finance world, if I can't connect my financial data where I am, then my experience is bad. It often doesn't reflect on the embedded finance provider. It reflects on the bank account I can't connect. So again, on both sides of the world, user experience is central. And I think we're really in a shift right now where the bank experience was central, the fintech experience was central. Now it's really about the consumer and where they are, not necessarily it's not about where they are, it's about who they are in that environment. And so it's an interesting shift again, as we look at the differences between fintech and FI.
I got it. So Wade, given what you've seen, you sort of painted a dystopian view in your last answer about moving to this like read-only world if we get it wrong. So I guess just coming back to that, like what's the cost of not getting it right, and what's the benefit of getting it right?
Yeah, I didn't mean to be dystopian. I just meant, the process is probably not done, and or that you have to walk into a branch in order to get a digital ID. To David's point, before you can get access to the API, maybe not the best digital user experience. But with that being said, I guess your question again was, what happens if you get this wrong, or what happens if you get this right? Yeah. And I think that if you get it right, then I see, and Suman had a question in here, so I'll try and answer this because I think it's relevant and similar. Um, Things like APIs have been around since computers were invented and big banks were allowing for computers to talk to computers in order for those large, Fortune 500 companies to have automated treasury, right? There's lots of employees all over the world that are building unique financial products for the largest companies in the world in partnerships between large FIs and large commercial entities. So in general, this kind of banking as a service, or whatever you want to call it, to me, a decade from now is just going to be called automated treasury. And really what we're talking about is things that the industry's been doing forever on a snowflake by snowflake basis, standardizing it on an API, and allowing the rest of society to benefit from having that level of interoperability with their financial institution. And really, if you think about the back office of any small business, if they're on an SMB platform that doesn't have access to data, doesn't have access to payments, doesn't have all of these tools, it's not as though that data is not floating around in paper boxes and, scanned checks and all this stuff. They just aren't a big enough customer to be properly taken care of as if they were, Ford or American Airlines, right? That would have all of those great tools and interoperability. So I think what we're seeing in fintech is taking efficiencies in specifically business, also in the retail side, adding in all of this automation that has been around. It just hasn't been democratized for everybody. And that's what I think we're really talking about today is allowing all these applications that have a lower burden, a lower hurdle rate to start integrating them, being available for everybody. And so I think if you're, since the financial crisis, right, a decade ago, we on the front page of American Banker had, Starbucks wants to be a bank. And, 10 years later, I'm, the clickbait yesterday that Square was taking on JP Morgan was hilarious. But it's this mindset that one of these big guys is coming after all of us. And I think they're coming. It may not happen as quickly as technologists would like, but as far as how fast will it come for the industry, when it's here, it's here. And at that point, it will be too late. So if you want to be able to be embedded into these different product offerings, then I think, both access to data and access to the product offerings that you have are critically important to be relevant. Maybe not today, maybe not 3 years from now, but for sure 10 years from now.
Great. Do you feel like you adequately answered Shimon's question?
I hope so.
Okay, good. Thank you. While we're here, Wade, I also want to ask you, what your decision was. How did you determine which data aggregators to work with, and how do you optimize those relationships? How do you get the most out of them?
Yeah, for us, it's because we're bank agnostic in that we can pass payments through our sponsor institution. And so for every credit, there's actually a debit, right? So we float a bunch of risk inside of each one of these payments. And so the big driver for us was really, stability of connectivity, right? So if I want to send a payment for $100,000, I sure want to know what the balance is of that account before I send the credit and the accompanying debit through the system. So stability for us is not just a wonderful, user experience, but also a critical input to our fraud engine to make sure that money is available. So that's really number one. Number two is we really focus in that B2B space. And so not all aggregators are created equal when it comes to the coverage of small businesses. And so that comes from the historical, small business is one digital banking platform and retail business is a different digital banking platform, which is its own problem that we can't solve here today. But just because you're connected to a super regional retail business line or a retail line doesn't mean you're connected to business. And so for us, the percentage of coverage inside of that small business domain was, mission critical to what we needed. And then just that fault tolerance, right? So I think one of the reasons we enjoy working with MX is they have many of their own direct connections, but they have fail safes that make it so that we don't have to orchestrate all of that ourselves, but can depend on a partner in order for that to happen.
Wonderful. I just want to give David the opportunity to respond to what you said, Wade. How do you see fintechs and FIs come to you and helping to determine, which aggregators they want to work with?
So a lot of it depends on use case, to Wade's point. So Wade talked about the B2B use case and how having that. So within MX, we have redundant connectivity. So while there are, I think, 15 to 16,000 institutions in North America, we're still working on like a 50,000 plus connections. So tells you that we have in some cases 2 to 3 redundant connections for each institution we have in our portfolio. So that creates just a distinct competitive advantage for us. But again, when we talk to the non-FI and the bank, it's what are you trying to do is one of the first questions we have, because they'll talk about payments. And Wade's use case of we want to move money, but we need to know how much money is there before we move it. And then sometimes not only do we need to know how much money is there, do we want to see a history of transactions? Is this a normal transaction in the history of this specific user? So digging into, is this just about money movement, or is it about your fraud analysis? Is it about understanding payment histories for a loan transaction? Is it, what are you actually trying to accomplish by acquiring the data before we just say, we're best suited for this or we're not? I think one of the other things we often see is, I just saw a question pop up and it completely sidetracked me in my thinking right there. Yeah, let's hop to that question.
Okay, so Sean asked, as a quick question for David, with all the talk of elimination of screen scraping, it's still being widely used with banks, aggregators, and fintechs often cross-messaging on why. What is it going to take to get rid of screen scraping? And do you have a view on that?
So I'd just say it's not simple. And I think just to back up some of Wade's comments, I think it's a journey, not a destination. To say that there will be this distinct endpoint that we say, oh, no, we're done. Everything's API driven. I think we're going to continually see new use cases that require different data sets that are not available in APIs. And so to accelerate certain areas, we're going to see screen scraping happen. So I don't think we'll ever be fully rid of it. I would say the tiering of how I see moving away from screen scraping happening is first, regulatory oversight. So if the CFPB comes out and says, banks, you have to have this minimum requirement for your data APIs. I think that's one step in the right direction. And then I think then kind of the game is on, right? So what is the minimum data sharing that's required? So that's, again, to Wade's point. Well, what if they just require 5 elements? Is that enough to really meet the consumer use cases and really power consumers to be financially independent and make their choices? So I think again, regulation is probably number one. Number two becomes technology. MX is working with a really wide array of service providers. So the online banking providers, the core providers, and we're helping say, that open source, open finance portal we talked about. We're actively trying to say, hey, let us help you secure your data. Let us help you accelerate these plans. And so I think it's a mixture of regulation, service providers building the technology to enable it, because not all banks can manage it themselves. And then it's also folks like MX coming to the table and saying, okay, here's how we see the risk environment. Here are the legal agreements that we see as benefiting both consumer, fintech, bank, and aggregator. There has to be a willingness to collaborate and be, for lack of a better term, co-opetition, instead of always saying, we're going to be in a fight to the end. There has to be a willingness. There has to be give and take. So I think I don't think it's going to be a quick road, but I think it takes, again, legislation, technology, and collaboration are the 3 things I would put out there. You're muted, Zach.
I was just getting excited. I feel like I could talk to you guys all day, but it is time. And I wanted to thank you, David, and you, Wade, for joining us at Day to Day 2021. This was a great conversation.
Thanks a ton, Zach.
Awesome.
Really appreciate the time.